It's easy to blame this on the companies. Oh, the market is like the companies. Are the bankers just getting it wrong here?
You know, a lot of these pre-IPO rounds really inflated valuations. So the net result was that the companies had to go out at those to justify the markups, and that's created a bubble at the end here. And I think we're going to see a lot more subdued pre-IPO rounds now in the future to make up with a market that is no longer going to value these companies so highly at these stages. So I think we're going back to the fundamentals. I think you've got to be a business that can show a clear path towards profitability. Mm-hmm. You've got to show scale and defensibility. I think a lot of these businesses have struggled out the gate because they are not necessarily so unique from a lot of their competitors. And so I think it's going to evolve and mature. But I think certainly there's been a disservice done to some of these companies out the gate.
So great point. So if a couple of venture capitalists, and Masayoshi Son is probably forefront among them, decide or push up a private valuation to call it $8 billion, right? I'm just making that number up. The market has to take the stock public at $8 billion, does it not? Otherwise, it's basically telling the private market rounds, sorry, you were wrong. You were wrong.
Right. So, I mean, it was the public markets had to justify the private market valuations. And I think WeWork was a great example of a business where finally the public market said, enough of this. We're not, the unit economics here don't work. There's too many related party transactions. Mm-hmm. There's way too much going on within this company that is not, following normal fiduciary responsibility, and so therefore we're not going to value it at this price. And so I think this marks a landmark for us in the industry.
Yeah. And does WeWork's problems, does that ratchet down valuations across the board, Ben? Does WeWork sort of cast a shadow over other private companies?
The line from Silicon Valley has been that it does not, but I think it does. I think that certainly in businesses, again, that are burning a lot of cash, not with a clear path to profitability, doing a lot of things that are not necessarily core to their main business, those types of businesses now are going to get a lot of question marks come IPO time. Certainly, I think if you're not in that cash-burning business, if you're doing something that's cash-generative, you are in a SaaS platform, a Zoom is a good example. Mm-hmm. I think those businesses are going to perform better in this kind of a market.